let's take a look at the numbers released on market yesterday. Now, gross premiums up 22% to 10 billion naira. Net premiums also up 22%. What really is the story behind these numbers?
I mean, Uche, we continue to grow our premium lines, got strong renewals from institutional business. We are also growing our retail business. You know, we probably know about our retail expansion drive ultimately. But oil and energy has been the top leader, growing by about 46% year to date. We also have fire insurance growing by about 34%, and motor growing by probably about 30% or so. So it's really a good story all around. A lot of positive notes from even the customers and the market in terms of insurance uptake.
Certainly, it seems like your investment portfolio continues to grow. I mean, looking at the numbers, profits seem to have been boosted by a rise in investment income, up 78%. I mean, what really is behind this?
I mean, we're seeing the result of a lot of work done at the Q4 2011, where we restructured our investment portfolio. We're much more tilted towards, you know, safer sort of asset classes, you know, fixed income, money markets, that sort of area. In the past, we've always had a drag from equities, and you know, by shifting away from that, that has benefited the organization quite positively.
Certainly, the sector hasn't been performing so well in the Nigerian Stock Exchange. But I mean, let's talk about claims. Okay. Rising 41%, half one numbers, similar situation. What is the reason for this?
We're in the business of paying claims, but claims usually do have cycles. So you do have the high claim periods and the lower claim periods. So this year has been the high claims year across the industry. With some of our top clients, I've also had, you know, witnessed some claims. And the only way you can ensure that you are there for them is to ensure the claims are paid at that point in time. IFRS also has had some level of impact on claims itself, because we now have a liability adequacy test. So it's not just about claims reported only. You actually estimate claims that could come up in an actuarial way, so which is quite different from the past, where it was largely just claims reported and an average percentage on top of that.
Yeah. Now, looking at underwriting performance, in the first half we saw an improvement. In Q3, I mean, underwriting profit up just 8%. It seems to be slowing down. And what's the case?
No, it's a balance between underwriting profit and investment income for an insurance company. Right. You need to ensure you bring in a lot of the free cash flows and you invest that and ensure you get decent investment returns. At the same time, you want to make sure that your portfolio is well balanced. So with the higher claims I talked about, you would see some level of impact. But the ultimate goal is to ensure you still have a positive underwriting performance and you're growing. But we do believe that some of these claims we have this year would probably not occur in the next couple of years or so. So it's really just about the trending cycle. But it's an industry-wide, you know, situation actually. So, but I think we do have still a very good balance. You can still see positive results, positive growth, cash coming in, and we're investing properly, and ultimately very decent performance for our stakeholders.
That's right. Well, let's talk about your strategy going forward. I know your CEO said last time that strategy going forward, continued expansion of retail distribution networks. Is that still your key focus?
Definitely our medium-term strategy. Right. We are still focusing on that. We had about 4 agency offices at the end of 2011. We've now increased that to 9. We call them Mansard Welcome Centers. We have 9 in Lagos, and we will be opening another one before the end of Q4. And we also are increasing our bank assurance, you know, outlets too, with other bank partners that we're working with. So I think definitely retail is growing. They've grown from 22% this time last year to 25% on a gross premium of 10 billion. I think they're doing quite well. So we do hope to take that to a range of about 40-60 in terms of split between retail and institutional business.
Okay, but I mean, how are you managing costs? I mean, that's an issue for a lot of financial institutions. Yes. Looking at your numbers, up about 18% this past quarter.
Yes, we're managing costs quite well. The increases you're seeing there is coming largely from our retail expansion. So setting up the branches, the infrastructure, all of these sort of things will definitely push up costs. We also have the cost of rebranding, having to change the brand of the organization. But I think we are still well in control, and we should see slightly lower, you know, increase by the end of the year. So it's really about growing sustainable business over the long run. So you will see a lot more results coming from our premium incomes next year from the offices we opened this year.
Now, certainly, I mean, the results were good. Analysts seem happy with them. But any changes to your forecasts going forward, especially for your full year 2012 forecast?
Definitely no changes. We definitely will close with our forecast within our probably better than our forecast.
Okay, now let's talk about the sector as a whole. I mean, certainly insurance hasn't been doing so well in Nigeria. NICOM has launched this huge transformation agenda, working together with the SEC also to make sure that insurance companies listed on the stock exchange, you know, are beginning to perform well. What is your take on the situation in the sector now? I mean, are we looking at significant improvement going into 2013 with this transformation agenda, or are we going to still see the sector sort of lagging behind?
I don't believe the sector will lag behind. The sector is going to grow strongly with IFRS, with a lot of support from the regulators. The market is still highly fragmented, unfortunately, and my opinion is that's probably why you still haven't seen the very best of results. So probably with a shrink of companies going from about 50 to a much more manageable number, definitely investors will see better returns for their money in the industry.
Right. Okay. Well, thank